What's up, everyone? My name's Justin. I'm a realtor here in Jacksonville with the Realkeeper Home team at eXp Realty. In today's video, I'm going to be breaking down and going over the market update report for January of 2023 as it pertains to the Jacksonville beaches and Jacksonville Southside area of town. Now, this can be a great video because whether if you're a buyer or if you're a seller, there's been some really good market trends to key into that I'll be going over in the video. So definitely stay tuned because when I come back, you're going to want to hear what I have to say. All right, and we're back. So before we get started, definitely, as always, please like and subscribe to this video and hit the bell so that way you get notified when we post more content like this moving forward. As we continue to grow this channel, we want to definitely make sure we provide as much value to you as possible. So definitely, if there's anything you would love to hear us talk about as well, definitely leave in the comments section so that way we can provide more content like that moving forward. All right, so as we start, again, if you've seen previous videos like this, you're very familiar with the data I'm going over today. Obviously, there's some changes, but the biggest thing I want to start off with is, first things first, we had a pending to list ratio of 30.2% for the month of January. Now, how did that compare to previous month in December? It actually shows that we actually had an increase in pendings, which was not actually really foreseen. Again, showing that there's actually some more demand occurring, most likely from buyers who have seen rates start to come down a little bit, and they're starting to get off the fence and wanting to now put a home under contract and close. Now, what we're also seeing is, homes in that $400,000 to $600,000 price range relatively have the largest number of contracts pending. Now, this differs from last month where we actually saw it for the first time in the last half a year dip to the $200,000 to $400,000 price point. And so with inventory increasing and homes that are going under contract increasing, we are seeing that most of those ones going under contract are in that $400,000 to $600,000 price point. We also noticed that homes in that $400,000 to $600,000 price point make up relatively the largest number of homes for sale. So again, we're seeing more homes hitting the market in that price range and more homes going under contract in that price range, which is very typical for this area of town. We did see too that the median list price for the area is actually $525,000. This is a reduction of about $24,000 from December, which again just goes to show that even though we're seeing more pendings, due to the increase in inventory, we are seeing that median sales price start to come down some. So as we look at this first graph here, you're going to see that we have a pretty good separation of homes for sale in relation to contracts pending. Now, for homes in that $400,000 price point, we actually are seeing more homes pending than we did in the previous month of December. This bodes well for you as a seller because it shows that if you're in that price range, you're having more demand for your home. Maybe not necessarily multiple offers, but more demand. And then obviously, as we keep moving down here, you're going to see that we have a total of 942 contracts that closed in the last 6 months. This is a continuing thing for the last couple months of inventory and of data. And this is actually the first time in the last 6 months we've actually seen under 1,000 sales for the last 6 months, revolving. Again, just goes to show that at the end of last year, even right now, we do have less homes going under contract than we did middle of last year to beginning of last year. Now, alternatively, we had a total of 362 listings that failed to sell. This is about the same as it was last month. Nothing too much to take into account here. Obviously, you're going to have homes that fail to sell due to pictures or due to price or due to condition, or just some sellers decide they don't want to sell anymore, or something else happens, something else changes in their life, they don't sell. But relatively speaking, this is about the same as we saw last month. Now, as we move on to this page, what you're going to notice here is the analysis of sold properties for the last 6 months do reveal that the median sales price was about $430,000. And it took about 32 days for the homes to sell. Now, keep in mind, median sales price, $432,000. Median list price from the previous page, $525,000. That's a pretty big difference. And what it does go to show is that a lot of the homes that are on the market right now at these higher price points are not the ones selling. And for some of these homes, once they start to come down on their price, they will sell. It's just some of these homes, they're at a price right now where buyers are just not willing to put them under contract, whether if it's due to price, or condition for that price, or really just motivation by the seller and the buyer. Now, what we also did see which actually was a shocker even to me, was we had the quickest sales in the last 6 months were homes in that $1.2 to $1.4 million price point. You don't normally think homes at that price point are going to be the quickest sales, but we actually did see that in the last 6 months. We also see here that the median sold price the last 30 days was actually $397,500, and days on market was 37 days. So you are kind of seeing a downward trend here. Last 6 months, we were closer to 430. Last month, closer to, we'll round it to 400. And then days on market has actually also increased from 6 month average or median of 32 to 1 month median of 37. Now, we also, one of the biggest stats I like to kind of go over is the median listed sales ratio for this area. Now, this area is actually 97.7%. That means for every $100,000 of price, a seller is getting roughly $97,700 for their home. Now, how does this stack up to previous months? Well, in December, we were at 98%, and in previous months, we actually were closer to that 100%, and even middle of last year, above 100%. So we are seeing that start to decrease, which just, again, goes to show that although some sellers may be listing their home a little bit high, they are willing to negotiate, they are willing to come down to make a buyer happy and to get their home under contract. And then lastly, up here, you're going to notice here that the inventory for this area was 3 months at the end of January. Inventory of 3 months is relatively still very strong for sellers, but it's not as strong as it has been. And to give you an idea, last month was 2.8 months of inventory. So to say and to think that in 3 months, if nothing new hit the market, we'd be out of homes in these areas, it is kind of crazy. Now, again, to put it all in perspective, 6 months is an equilibrium market. Anything over 6 months of inventory becomes a buyer's market. So we're still, like I said, relatively a seller's market, just not as much of a seller's market as we were, this time last year. Now, these two graphs here, you're going to notice they really kind of dive into a month-over-month change in price and in days on market when it comes to the medians for these areas. So we actually saw here that in January, we actually did see the sold price go up a little bit in relation to the previous 4 months. Now, this is a pretty big, difference, and this just does go to show that even though we had more inventory in January, we did have more contracts and therefore more closings in January that did buffer that number and push it up some. It'll be interesting to see how future months play into it, especially as we also look at how rates are starting to, continue to change. Now, median days on market, we are seeing that start, increase. January was about the same as December, 35, 36, 37 days on the market. Relatively speaking, that's pretty much what you would expect to see. Seeing under 30 days is great for if you're a seller, but it does bring up the idea that it's not sustainable. And so going back to about 35 or so days on the market, that's pretty sustainable. And that allows a seller to get enough time marketing their home, and it gives buyers enough time to where they don't have to rush to make a decision on a home. All right, so lastly, this graph, just want to kind of go over the the boxes in red, orange, yellow, blue over here. And the biggest thing with this is, if you see my previous videos, you have actually probably seen how, in each month, we're getting less and less red boxes and more orange boxes. And the red's just, that's just saying we have less than 3 months of inventory, which just means it's a very hyper seller's market. Orange still means a seller's market, just not as hyper in that sense. And so what we are seeing is now having homes in that $400,000 to $600,000 price point and $600,000 to $800,000 price point being above that 3 months of inventory. It's huge because that means that you as a buyer have more options. It means that you as a buyer have the ability to negotiate a little bit more for the home than you have in previous months. And it also means you don't have to move as fast because, again, if you do miss on one, there's a good chance another one's going to pop up relatively quickly. Now, as a seller, there are still great items to take away from this. One of which is the fact that the pending ratio is up. And all that means is that, again, even though there is more inventory in the market, you're going to get an offer. you're going to get a buyer who's going to like your house. Now, again, you can never guarantee what they'll come in at, and that's where negotiating does come into play. But realistically, it is one of those things that there are ready, willing, able buyers out there looking for a house just like the one you may have. Now, last thing I'll bring up before I end this video is interest rates. Interest rates in January continued to see a downward trend. That was great for buyers and sellers collectively to see. Great for lenders, great for realtors, and it is to kind of show that the lenders out there are starting to hope and see that a push down or a leveling off of the Fed funds rate this year is going to occur sooner rather than later potentially. However, it is something to continue to monitor. We did have the January jobs report come out last week and was definitely a bit higher than expected for most people. So it'll be interesting to see when we do this video next month how that may have played a role in February's data. But relatively speaking, it's still a great time to buy or to sell because there are still people looking to buy here. There are still people looking to sell here. And Jacksonville's only going to get busier as it tries to catch up to cities like Orlando and Tampa and Miami. So if you like my video today, definitely give us a like. That would be awesome. Definitely helps support the channel. And like I said, if there's anything you'd like to see us post in this not in this video, but in this channel, please let us know in the comments below. We love to get feedback. We love to know what we can improve on, what we can provide more value on. So definitely let us know, and that way we can provide you more content similar to this that gives you a better idea of what Jacksonville has to offer and what we can do to help. So other than that, I'll catch you in the next video.